Holy smokes, everyone. The Federal Reserve has finally done it. They're finally using their brain upstairs and they're finally thinking about tapering its quantitative easing if inflation runs too hot. Now, I know you may be thinking, Michael, why do you always talk about the Fed? And why is it so important that we listen to every word the Fed says and listen to all their announcements? I'll tell you why. Because the Federal Reserve is the most important entity for the global economy, for the US economy, and for the global markets, and for the stock market, Bitcoin, precious metals, commodities, you name it. The Federal Reserve give us the biggest indicators about what's going to come. And of course, this chart here, one of my favorite charts that shows why we do need to listen to the Fed. While the Fed is your friend, if you're in the stock market and you want stocks to keep going up, with the red line of the S&P 500 and the blue line of the Federal Reserve's balance sheet, this is exactly why we need to listen to the Fed. Because if they keep expanding their balance sheet, stocks gonna go up. But if they start tapering, it's going down. So looky here, everyone. This is the first hint. Now, you may not think this is a big hint, but the Federal Reserve always speaks in riddles and tongues, and they're not going to tell you straight out what they're going to do, but they'll provide you hints about what they're going to do. So it says here, the Fed hinted it could reconsider easy policy if economy continues rapid improvement. Well, we are getting that rapid improvement. GDP is expected to grow at 10% in the first quarter. Also, a lot of the jobs are coming back, but they're not very good jobs, and people are still getting paid unemployment benefits, so they may not want to work. I know a lot of people say, oh, don't say that people want to work. I know some people do, but it is definitely playing a factor. You can't deny that. And this is something I've been warning about. A couple of months ago, I was saying, look, it looks like inflation is going to start really heating up. I think the Federal Reserve is going to have to start tapering, and they may have to start lifting interest rates much sooner. All the central banks around the world saying, look, we're not going to lift interest rates till 2023. The RBA was saying we're not going to lift interest rates till 2024. And I was saying, people, they're lying to you. They're trying to lull you in. They're trying to get you to max out your credit cards, take on as much debt as you can, buy as big a home as you can. They love it when you pile on in debt because this economy relies on debt. And they don't care about the individual. All they care about is numbers on a screen going up, and they don't have your best interests at heart. They'll tell you to keep on taking on the debt, but then they'll say also inflation is contained, just like they said subprime crisis was contained. And then they'll lead you into a false sense of security, and then bam, inflation hits. They've got no choice but to lift interest rates. People took on too much debt, and then they can't afford the higher repayments, and then they default. And people, this came from the Federal Reserve's latest meeting minutes, which was between April 27th to April 29th. This was before the really high inflation data came out, so I can't wait to hear what they've got to say during their next meeting after these high inflation numbers that came out. CPI was 400% above expectations. In April, they expected it to be 0.2%. It was 0.8%. And it was 4.2% annualized. That is double the Federal Reserve's mandate of 2% inflation. So they have to act now, and I think in the next Federal Reserve minute, they're going to start talking about tapering the balance sheet. It says here, a number of participants suggested that if the economy continued to make rapid progress towards the committee's goals, it might be appropriate at some point in upcoming meetings, that's a hint there, a big hint they're dropping there, to begin discussing a plan for adjusting the pace of asset purchases, the meeting summary said. People, this is huge. They're dropping the biggest hint they can. Again, like I said, they're going to speak in riddles. They're not going to tell you it straight, that they are going to taper. And again, this chart shows you why it's so important and why I keep telling you about this, because this is the best kind of crystal ball we can get. We don't have a crystal ball. We can't predict the future. But if I only had one chart or one indicator to predict the future, this is one thing I would look at. And they finally admitted inflation is rising. Along with that decision, the Fed upgraded its view on the economy, saying growth has strengthened and inflation was rising. So they finally noted here. That's another big step. But people, the markets aren't buying that this inflation is going to be transitory, and the markets aren't buying that interest rates won't go up till 2023, and this proves it. Look at this. Traders are now worried that the Federal Reserve isn't being proactive enough. And that's completely right, because the longer the Federal Reserve lets inflation run hot, they get closer and closer to letting the inflation genie out of the bottle, then inflation could run too hot and they may not be able to contain it. We may get inflation of the 80s. It says here, the Federal Reserve may be trying to project a coherent vision on what it expects its policy on future rate hikes will be, but the market cannot seem to agree on what the vision of the Fed it wants it to believe. That's right. We're seeing so much craziness in the markets. The market seems very uncertain. It'll drop for 2 days, then it'll bounce. We'll have a big increase of 1 or 2%, then it'll drop again for another 2 days, then we'll have a bounce. The markets, they're just really the algorithms are trading right now, and they're just trading off sentiment. And clearly the market's going nowhere. It's just going down a couple of days and up, and they're just trying to figure out what the heck's going to be coming. And it says here, many traders want the Fed to be more proactive. They want communication, and that's right, I want communication. What the heck are they going to do? We need to know this so we can make better informed financial decisions, especially if you're going to be purchasing a home, especially if you're going to be buying a home or taking on debt, and then all of a sudden they raise interest rates. They want communication to begin now. They want to hear now what the Fed is thinking about changing its stance on tapering and raising rates. That would be a short-term negative for the market. So if the Federal Reserve does come out and says it straight, not these little hints or riddles, on June 1st, we're going to start tapering by half, and in 2022, in February, we're going to start lifting interest rates. We will see the market try to price in these high interest rates and this tapering, but then the market will have certainty, and the market loves certainty. And then they'll start to price in the next catalyst to lift the market higher. But now there is growing fears that they'll not act sooner, that they'll wait too long and have to slam the brakes down the road. And that's right, that's a huge risk, because say for example, if the Federal Reserve just lift interest rates by 0.5% or 1%, they could contain inflation now, and that would be it. We'll just see a bit of a sell for correction in the market, a correction in the housing market, but it won't be too bad. But if they wait too long and inflation gets out of control, and then they have to lift interest rates to 5 to 10% to get inflation back under control, well, that's when we'll see a complete market meltdown. I'm not saying that's going to happen, but this is what traders are worried about, and this is what's so dangerous and why they do have to act now, because if they don't, it will just mean more pain down the road. And Mohammed A. Al-Arian expressed a concern that the Fed is indeed getting behind the curve. And this is something I agree with, specifically since some European central bank officials are already making a case for some reduction in the size of its assets purchase program. Judging from the market's action, and on Wednesday there was a bit of a sell-off, and it was also a sell-off in assets that historically do not move together. It's clear worries are growing about the risk of a policy mistake. And that's right. It's a weird environment we're in right now. Sometimes stocks are falling, gold's falling, the US 10-year Treasury is falling. It's a very, very weird environment right now, and it's very hard to predict what's going to happen. And he says here, and this is so true, after all, one of the last things the economy needs right now and the markets is a late Fed that is forced to slam its brakes. And the reason why I think the Federal Reserve doesn't want to taper its balance sheet is because of this, the US 10-year Treasury yield. The 10-year Treasury yield is looking like it wants to break out, but the Federal Reserve keeps coming in and buying these US Treasuries to keep the yield down low. And the reason for that is because they're already pretty much doing something that's called yield curve control. That is where what the RBA, the Reserve Bank of Australia, did in Australia. They buy bonds to keep the yields low on the US Treasury so the government can go out there and take on huge amounts of debt, and so the interest bill is reduced, and it's called monetizing the debt. Because imagine if interest rates go above 2% or 3%, a lot of taxpayers' money and a lot of the government's revenue is just going to go into serving the interest alone. And you know what really annoys me is Jerome just keeps saying, for every debate or every question they come at him, he just keeps saying, like a robot, we got to make substantial progress towards our goals. Well, hey, I think you already have, Jerome. You've got inflation, double your mandate of 4.2% annualized. You've got jobs coming back. You've got weekly unemployment figures going down. I know we haven't hit full unemployment, but here's the thing. If they don't get inflation under control, even if you do get a job, you're not going to be able to afford the basic essentials. And that's because if inflation gets crazy to 10, 15% and your wage is only going up 3% per year, you won't be able to keep up. And this is why I'm so passionate about this subject, is because they're the ones in Wall Street and the central bankers, they've got enough money to afford this temporary inflation blip, but the poor and the middle class can't afford it. They can't afford their grocery bills to go up 10, 15%. They can't afford their transportation costs to go up 10, 15%. So there needs to be more of an outrage, and there needs to be more action taken now to stop the Fed before they make the cost of living unbearable. So everyone, buckle up. I think we're going to have more volatility in the markets until we get a clear direction on what the Federal Reserve is going to do. And when we do finally have a clear decision or a clear game plan for the Fed, we can start making better investment decisions. So for all my loyal viewers and subscribers still watching, you're awesome. If you haven't already, please tap that like and subscribe button. I'll keep you update on the latest happening in the stock market, the housing market, the Federal Reserve, and global finance news. If you're bored, I'll put up some other videos here. I'll see you there.